day all. Ira Epstein of Linn Associates with your agriculture update, and this is for Monday, and this is the 12th of August, 2019. Two events. First, there was a bad fire on Friday that took place in Kansas at a Tyson feedlot, and not feedlot, slaughterhouse. As it turns out, we were getting reports. We didn't know how bad things were going to be. This morning I found out, and that's when I found it out, the whole roof had caved in. And to make a long story short, they were slaughtering 5,000 to 6,000 head of cattle a day. Cattle went limit down on that news, feeder cattle limit down, because in that area there's no place to buy it up other than I was on a map 10 minutes ago, you got to have transportation to get it to those plants, and now you're dealing about 100 miles away is the closest. There's a number of plants. There's National, there's JBS, there's Cargill. So you've got three different types, but some are as much as 200 miles away. How do you get the animals there at a fair price? Then we had the big USDA crane report, and I'm telling you, I don't know anyone that got it right, even close to it. The estimates I saw, I want to say they weren't within an earshot. They weren't anywhere. When you take a look at the planted acres, the government said, with the rain and all, we still have 90 million acres. The trade was expecting 88 on average. I saw numbers down to 85. Then the harvested acres are 82. The trade expected 80. Another big problem. Then the production coming out, as you can see, at 13.90 billion bushels. The trade was expecting 13.200 billion bushels. No. These are monster big numbers. Yield, okay. You would think that the yield would be down with that rain. However, this proves something if these numbers end up this way. Apparently our GMO corn can withstand anything you throw at it, and the farmers in America, you can throw all the wet weather you want. They get the job done. Great for them. The problem is the price, and that is the issue there. When we take a look at soybeans in the planted acres, there was talk that the acreage that didn't get planted in corn would go to beans. No, 76 million acres, they're expecting 81. So these numbers just keep going in all the way through, and what you ended up with was a market today in corn that went down approximately 6%. That is the most in, it's got to be the most in many years, 6 years, 7 years. Something like that. And it's the first limit down that I remember in corn in recent times. We're going back to look at it probably a couple of years. So this was a monster move that took the market by surprise. In the market away from the limit down, because you can figure out where the markets are with synthetics. And that's looking at different months trade, and there's a formula for that, and it helps you with the options to figure out where the price should be, about another 3 cents lower. So when we look at soybeans, you can see that the market is doing, as a chartist, just take off the name, you're back and still fighting at this 18-week moving average of closes. The bias is back down in beans because the settlement's under it, but the battleground's laid out. You're fighting at that 18-week moving average of closes. On the daily bar chart, I adjusted this line, this downtrend line, and I connected today's high, I connected Friday's high, and I could do all kinds of connections to this one, but the most recent high is here. I tried it here, and you don't intersect those lines. So giving you an idea as to where it might be in terms of the downtrend, let's call it the 890 level. When we're taking a look at what the swing line is doing, even with the break, it's bullish. It still has the higher lows, the higher highs. You filter that by looking to see where the market's at in the 18-day average of closes. And as we so often say, if you get a rally off a big break, it's not uncommon you go back and fight a battle at the 18-day average. This is how the market looked on Friday. So if it continued up, I would be looking for the 100-day average as the resistance point. Instead, the market slipped back. When we put on Bollinger Bands, you're nowhere near them. So you have a market that's mixed. You have the swing line up, the bias down, and when you look at momentum, it had been pointing up, and now it's suddenly going sideways on you. When we go to the meal market, and I'm in the Dees meal now, you have a higher high, lower low. So you're not trending. You are oversold in the market, and the bias is down. When we go to December soybean oil, and I've moved to the Dees again here, overbought, But this has been the power of the market. It's come straight up from, if you take a look, this low here was 27.88. Today's high was 30.18. So this is the part that's bullish. The other parts aren't. On a big break, if you were to get one, I'd look for support of 28.74 to 71, the combination of the 18 and the 100-day average. And something else could be on the brew here. You might get that 18-day average over the 100, which would be a bullish crossover. So that could add some fuel to this fire all of a sudden. In the corn market, whoa, limit down under the lower Bollinger Band, but you have to admit that the market on Friday went back to the 18 and the 100-day average. Now, going through a report of this nature, I don't think, I know what I told my clients, and you don't bother with it, you wait and you see the result of it. I never thought we were going limit down, that's number one, and I thought the report would be certainly nothing in the numbers that came out. Was I wrong in my anticipation? Yeah. Was I wrong in the market? No. In the wheat market, higher high, lower low. So this market they pulled the plug on too via the report. Sugar market. Now, a lot of foreign markets failed today as the marketplace is nervous about where yields on the 10-year note is and currency plays. That's why I'm mentioning this. And you're down to 164 on the 10-year, and the 2 is getting ready. It looks like the crisscross on it. Very, very recessionary type plays that it's signaling. But in any case, lower highs, lower lows. Looks like the pros sold the 18-day average on Friday and today, and we'll see if they can get the market down to the Bollinger Band. Now, in certain markets, you know, Argentina saw a nightmare election yesterday where the current president is out probably for all purposes when the re-election comes in October. And via that, you lost a dramatic amount in the Argentine peso, which of course impacts their exports and so on favorably. Just like China letting their currency fall. Well, as this peso goes down, there's a favorable number there, but what do they have left to export? Coffee fell like the other markets. Now, I thought this market, when it was losing its embedded reading here, as you can see, a 22 number would stay lost. It didn't. It instead came right on down. So again, the embedded readings in play, and this is a new break low for this move. When you come to the cocoa market, just running all the way down with the embedded reading. Certainly dangerous to sell this size break, but there's no reason to be a buyer other than you think it's cheap, and that's never good enough. In the cotton market, you have higher lows, higher highs. The question is, will you take this out and resume down? Now, if you do, what happens is you're still oversold. You're not even trying to embed, so you got to be cautious there. Cattle didn't trade, limit down. Feeder cattle didn't trade, and pork got a bid off that news. And what you're going to see happen in the stores because of this is the probability that wherever the Tyson plant was servicing, while other plants will try to sell off some of their stock to the clientele and take clientele out of that for the near term, how do you get the animals to another Tyson plant? I'm telling you, it's very difficult. We'll see if they come up with a game plan. And Tyson, in all fairness, has offered its workers there. Nobody's being let go. They're paying them. I assume they have business interruption insurance, but what do they do for the feedlots around there? And what this is going to probably do in the stores, that's where I was headed, is your retail beef prices might climb on this, whereas the wholesale, well, in that area at least, it's getting smashed. So you put it all together, you try to come up with a game plan, and what we're going to do here for you at Linn, let me get to where I was. There we were. I thought we were. There it is. My fault. I keep hitting the wrong buttons here. They're going to have a lot tonight on this. If you don't get, and you're in the agriculture sector, and you don't get their information, maybe you want to see it. Were they right on the corn? All I can tell you, I don't know anyone that was right on that corn number. How's that? Not any firm that, and I look at everybody's estimates. I couldn't find anybody that was right. So they'll be writing about that, what's going on in the meats. And for agriculture markets, it's something you want to see. Again, I want to repeat something. Going through big reports, how often do you think the government actually sits and does a new survey? It's very rare. I want you to think about the word fake news. Were we watching fake news of all the floods and people's lives being impacted, turned upside down on the rivers, in the plains, as we saw all that? And then you look at these numbers today, and all I can say is, Wow. It's that simple. We'll be writing about it and we'll try to bring you up to date. I'm Ira Epstein. If you'd like to get this info, here's how you do it. You can either call us at 866-973-2077. Go to our website at www.iraepstein.com. We have a carousel of free offers right on the front page. Click on any of them. Sign up for the Linn Research. We'll get it to you. You might want to sign up for a free trial to mine. I write on the financial markets a couple of times a day, and I think you'll enjoy that. You can click here, by the way, if you're watching me on YouTube. It'll take you right to that page. Sorry for hitting the wrong buttons. I'm Ira Epstein. See you tomorrow.